Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and well folks, if you thought the Fed was going to deliver some holiday cheer, think again. Jerome Powell just dropped the mic and the stock market, well, it just dropped. Here's the headline. The Federal Reserve did cut interest rates by 25 basis points as everyone and their dog expected. But instead of the warm, fuzzy feelings of an easing Fed, Powell served us a frosty reality check. Fewer rate cuts are coming in 2025. Yep, the Fed's famous dot plot now shows only 2 cuts for next year, down from the 4 in September. Inflation's too sticky, the economy's too strong, and Powell's out here playing bad cop with your portfolio. As Powell said himself, when the path is uncertain, you go slower. Translation, we're in a dark room full of furniture, and Powell's holding a flashlight with dying batteries. The market, this did not take it well whatsoever. Let's look at the Dow Jones Industrial to see its 10th straight day of losses. 10th straight losing session, tumbling over 1,000 points today alone. That's the longest losing streak since 1974. To give you perspective, that's almost as long as the streak as the Lions not winning a Super Bowl. Back when bell bottoms were cool and inflation was way worse, by the way, back in the 70s. And if you're into tech stocks, you might want to look away. The Nasdaq, let's go take a look at that. Why don't we? Nasdaq Composite. Oh, wrong one. So if we look at the Nasdaq Composite here, that had a nice little 30.56% drop on the day. And the S&P 500, not like it did any better, buddy. Got smacked with a 3% loss. Even NVIDIA, our golden child of AI, couldn't escape shedding over 1%. Now, Tesla was the biggest loser of the Magnificent Seven today that we can take a look here. Shedding about 8% on the day, and they're down 2% after hours. I got $600 calls due in January, so shout out to myself for that. Amazon and Microsoft followed, taking a beating worse than Powell's press conference Q&A. So why is all of this happening exactly? Rates are still high, inflation's stubborn, and the Fed's basically saying don't get too comfortable with rate cuts. The 10-year Treasury yield popped to 4.5%. Not great news for rate-sensitive sectors like real estate or small caps. The Russell 2000 cratered. Let's take a look. IWM today just shit the bed, dropping 4% in our session. The Dow is now the biggest loser in this meltdown. Once the darling of market stability, it's officially on its longest losing streak in nearly 50 years. So much for that 2024 Santa Claus rally. Here's the real kicker. Powell admitted inflation is proving harder to tackle than expected. And with President-elect Trump's policies on the horizon, hello trade tariffs and stimulus spending, economists are already bracing for another inflationary wave. Let's buckle up, folks. Markets are now pricing in the likelihood that the Fed could slam on the brakes harder than expected if inflation flares up. So enjoy your eggnog, just don't count on the market to give you anything nice this Christmas. In summary, Powell gave us a hawkish rate cut, stocks tanked, and 2025 looks like it's going to be a roller coaster ride. If you're in the market, maybe it's time you rethink that quote-unquote safe bet strategy or just invest in Tums, because this year isn't over yet. That's all we have for today, folks. Don't forget to hit that subscribe button and make sure you drop a comment below. It's hot. Are you buying the dip or are you just dipping out? Let us know in the comments. See you next time. And remember, markets don't sleep, but you probably should, especially after your portfolio today.